It's 5 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stock futures rise as investors look ahead to Nvidia earnings later this week. Bitcoin rebounds after erasing its year-to-date gains. President Trump urges House Republicans to vote in favor of the Justice Department releasing its files on Jeffrey Epstein, reversing a stance that he had held for months. And U.S. airlines are set to resume normal operations after more than a week of government-mandated flight cuts as Boeing's factory workers return to producing airplanes. Take a look at what's going on in terms of futures. We are up across the board, not at session highs, but 0.5% almost on S&P futures. NASDAQ futures gaining 0.75%. And the small caps are up as well. In terms of treasuries this morning, we're looking at a 2-year yield. Actually, across the curve, we're looking at yields lower, but a 2-year yield at 359.34, a 10-year at 412.11 as investors buy those bonds. For some stocks to watch, let's get over to Valerie Teitel. She's in London. Valerie?
Good morning. Matt, let's start with a check on what's leading those gains in the Mag 7, possibly what's leading those gains in the NASDAQ, and that is shares of Google up over 5.5% after the 13F filing has showed that Warren Buffett's Berkshire Hathaway has amassed a near $5 billion stake in the company in the third quarter. This does come alongside them trimming their holdings of Apple by 15%. So normally we don't see these kind of reactions to these delayed 13F filings, which showed us most what happened in the last 3 months, but Alphabet shares really gaining off the back of these 13F filings from Berkshire Hathaway. Next, let's move to Morgan Stanley downgrading the hardware sector. Dell receiving a double downgrade from those Morgan Stanley analysts. Shares of Dell are down 3.6%. They also downgraded HP and HPE. Those shares both in the red, down over 1%. This is as they quote, sluggish demand in the broad hardware sector. Lastly, let's move on to some acquisition news. Clearwater Analytics. This is a company that is an analytic company focused in the investment space, up nearly 12% after over the weekend. It was reported that Warburg and Permira, two buyout firms, are interested in taking this company private. Now, it's interesting because these two companies were the ones that took this company public back in 2021. But with the share price now back to where it went public, perhaps they see value in buying the company. Matt?
All right, Valerie, thanks very much. Valerie Teitel there with some stocks to watch. Coming up this hour, we're going to speak with David Royal, Thrivent Chief Financial and Chief Investment Officer, as well as Lucy Baldwin, Global Head of Research at Citi. But first, President Trump has reversed his position regarding the release of the Jeffrey Epstein files, posting on Truth Social, quote, House Republicans should vote to release the Epstein files because we have nothing to hide and it's time to move on. The House Oversight Committee can have whatever they are legally entitled to. And then in all caps, I don't care. Joining us now is Bloomberg's Suzanne Lynch. So it's interesting, Suzanne, do we know why the president has reversed his stance and why he was so dead set against releasing these files in the first place?
Yes, this is a problem that is not going away for Donald Trump. And this abrupt shift that we have seen by the president on Sunday, I think is underlining the fact that he knows this vote is coming this week. The House is due to vote to release these files on Tuesday, and all signs are that there are a significant number of Republicans who are prepared to break with the president on this issue, and he knew that. This appears to be the kind of motivating factor behind this shift we've seen by the president. We thought he couldn't have been clearer in that social media post. He's calling for the files to be released. But I think it is significant that we're seeing this break with the president, that this issue is the one that has divided his caucus, his support base in Capitol Hill when it comes to these Epstein files. So let's see if his intervention changes things ahead of that vote on Tuesday.
Yeah, it was a quick flip, really, because he was so angry with Marjorie Taylor Greene for supporting the release of the Epstein files that he called her a traitor on Truth Social. And she said on the Sunday shows that puts her life in danger.
She did. I mean, this was an extraordinary escalation between Donald Trump and one of his traditionally most staunch supporters, Marjorie Taylor Greene, who has broken with the president, not just on this, but other foreign policy issues, for example. But as you said there, the member, she was very strong in her statement on the Sunday shows on Sunday, saying that this language by Donald Trump was putting her family in danger. She was suggesting they had received threats. But significantly, she also outlined her support for the president during those statements on Sunday, saying she was still fully behind President Trump. So perhaps there is some kind of a rapprochement now between Donald Trump and Marjorie Taylor Greene. And of course, she is not alone. There are a number of members who have broken with Donald Trump on this Epstein issue. So it's really becoming a tricky issue for Donald Trump. It's not going away. And because these votes are happening now, I believe that he felt he had to move on this.
Let me finally ask you about further sanctions on Russia, on Russia's trading partners. What is the president now prepared to do to try and hold Vladimir Putin back in the war against Ukraine?
Yes, significant statement by the president saying that he is prepared to back a Senate bill that would punish buyers of Russian energy. And really, who's in the frame here? It's India and China, two of the big purchasers of Russian energy. This bill potentially could allow tariffs, of up to maybe 500%. This could be potentially huge. Donald Trump has said he is in support of this. Figures like Senator Lindsey Graham has for a long time been calling for this. So I think it's significant in that it shows this hardening of Donald Trump's stance vis-a-vis Russia. As we know, these efforts to get Vladimir Putin and Volodymyr Zelensky, the Ukrainian president, around the table, some kind of peace deal, have not happened since that Alaska summit over the summer. So I think this is further evidence that Donald Trump is losing patience with Russia and with Vladimir Putin as this war drags on.
All right. Thanks so much, Suzanne. Really great to get your take on these stories. Bloomberg's Suzanne Lynch coming to us out of Brussels. Now, over in Asia, China is escalating its confrontation with Japan over Prime Minister Takaishi's comments on Taiwan earlier this month. A social media account linked to China's state warned over the weekend that Beijing has, quote, made full preparations for substantive retaliation. Joining us now from Beijing is Bloomberg's Colin Murphy, who covers China. So, Colin, first remind us, what the incoming prime minister has said about Taiwan and what China could possibly do in retaliation.
Right. So I'm not sure how much this story has sort of filtered to the US or other parts of the world, but it's the biggest story out of Asia today, I think. And it goes back around a week ago when the relatively new Japanese Prime Minister, Takaichi Sanae, made some remarks in which she said that should there be a conflict between China and Taiwan, that would constitute an existential threat for Japan, which has the implication that Japan could then mobilize its self-defense forces. And this kind of rhetoric or this kind of talk has obviously been super provocative in the point of view of Beijing. And it has led to the past week basically, of over and back in terms of denouncing what Takaichi said and taking countermeasures. So the other point to remember here is that this is coming immediately after Prime Minister Takaichi met with the Chinese leader Xi Jinping on the sidelines of APEC in South Korea, where they had both agreed to improve bilateral ties. So in a way, it's kind of seen here in Beijing as a slap in the face coming from Takaichi so soon into her position as the new Japanese leader.
So in this case, I guess the prospects for easing tensions between China and Japan have been greatly reduced. How can this be turned around?
Well, we're still in the process where we're seeing the sorts of retaliation that China is talking about. So far, they've done things like warned Chinese residents about the dangers of traveling to Japan, and also similarly telling students to think twice about studying in Japan. There's been a whole bunch of exchanges on social media, And, there has been state media pointing to future possible steps, including sort of economic sanctions, whatnot. So it's not looking good. Now, Japan is about to send a diplomat to China in the efforts possibly to sort of smooth this out. There is an opportunity, in theory at least, at the end of this week when Li Chang, the Premier of China, will actually be in South Africa at the same time as Prime Minister Takaichi for the G20. However, it's unlikely that the two will actually meet because it's a little bit too soon, I think, or the story is still unfolding. So in that context, it does look like these tensions between Tokyo and Beijing will continue for the foreseeable future and for sure into 2026 as well.
Colin, thanks very much for your time. Colin Murphy there reporting out of Beijing. Let's get to the other top stories trending on the terminal this morning. Doubleline Capital founder Jeff Gundlach is keeping his strategy simple by loading up on cash and staying away from private credit, which he says is awash with, quote, garbage lending. In an episode of the Odd Lots podcast, Gundlach called out nosebleed valuations in the equity market and warned investors against incredibly speculative bets. Jeff Bezos, meanwhile, is throwing his money and time into an AI startup that he will help manage as its co-chief executive. According to the New York Times, it's called Project Prometheus and will have $6.2 billion in funding, making it one of the most well-financed early-stage startups in the world. And U.S. airlines have been able to resume normal operations starting today after more than a week of government-mandated flight reductions. The U.S. Transportation Department and the FAA announced they would lift cuts across 40 major U.S. airports starting at 6 a.m. Eastern today, so in just about 50 minutes from now. Coming up, we speak with David Royal, Chief Financial and Chief Investment Officer over at Thrivent, in your CFO brief. Next, this is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. U.S. equity futures gaining this morning as investors look ahead to earnings from Nvidia later in the week. Let's dig into the outlook for the equity market and the state of the U.S. consumer. In this month's CFO briefing, we're joined by David Royal, Chief Financial Officer, as well as Chief Investment Officer at Thrivent, as well as Bloomberg Senior Editor Nina Trentman. Thrivent is a retail-focused financial services firm with now $193 billion in assets under management. David and Nina, thank you both very much for joining us early this morning. David, let me get your take first on the AI bubble talk, because it's perked up a little bit lately with Jeff Gundlach's interview on Odd Lots, as well as the sale that we saw from Peter Thiel and his 13F of Nvidia shares. What's your view on this incredible investment?
Yeah, no, I think we still think there's some opportunity there. I mean, unlike 2000, a lot of the AI investments being funded out of cash flow. So I do think it's different. It's hard to predict who the winners and losers will be. If you go back to 2000, it wasn't necessarily the infrastructure providers, the Intels, the JDS Uniphases of the world. It was the utilizers of the internet like Amazon. I think we'll see some of that with AI as well.
I'm just following up on that. I'm just thinking about future investments. What do you see your retail customers doing at this point in time, given that we're facing a lot of uncertainty as to where will markets head from here? Yeah,
I think there's still a lot of caution. There was a lot of volatility in the first part of the year that came down a little bit in the third quarter, but it's picked up again in the fourth quarter. A lot of people are still sitting in money markets. Our money market fund has about quadruple the assets it had 3 years ago. Industry-wide money market assets, as you know, are pushing $8 trillion, up from $4 trillion just a few years ago.
And just thinking about the upcoming Fed meeting next month, we've been seeing about 50% chances of a rate cut being priced in at this point. What do you think the Fed should prioritize at this point?
Yeah, those chances have really come down. Going into the Fed meeting, they were 85% or so before Powell's press conference. They're balancing the risks of inflation and unemployment. I'm more worried about unemployment at this point. The 3-year rolling average of employment, prior to the shutdown was 29,000 a month, and the private numbers numbers imply that last month was probably in that range. When Powell was talking in Jackson Hole in August of 2024, he said any further weakening of the labor market would be unwelcome. They were averaging 120,000 a month back then, and actually 170 given the data he had at the time.
It's interesting because I think, especially being in the Midwest, I'm from the Midwest, you're in the Midwest, you would be more worried about inflation. I mean, consumers have already been hit so hard, and even though we're not looking at 9% right now, 3% on top of what we've already had must be incredibly damaging.
It is, and we hear that. Probably the things we hear most often from our clients are those effects of inflation, and particularly housing costs. When are my children, grandchildren going to be able to afford a house? But we are seeing signs of weakening employment. Speaking of the Midwest, Target announced layoffs recently in my hometown, Minneapolis, and so I think we're starting to feel it on the employment side as well.
Yeah, we're starting to see a lot more layoff announcements on the headlines. I want to get back to the money market assets because you have quadrupled your money market assets at Thrivent, and we just heard from, again, Jeff Gundlach on the Odd Lots podcast with Joe Weisenthal and Tracy Alloway that he's going to cash. Now, that may be severe, right? And he's known for his strong statements. Yep. But you do see a lot more fear in this market, and I wonder if you think that could drive money market assets further.
I think it could, but I think people should be looking at lengthening duration. I mean, normally in a recessionary environment, you want duration. And so I think there's, you can lengthen duration without moving into lower quality assets. So obviously governments, but also high quality corporates we like. Another area that I think is neglected right now is municipal bonds. Municipal bond spreads are quite attractive, and I think can be a high quality way of lengthening duration in taxable accounts.
David, just following up on one point that Matt made earlier about private credit and the outlook for private credit, wondering what you're hearing from clients on that and what your personal view is on that asset class.
Yeah, I think there's a lot of interest in private credit. I mean, some of that I think is public high yield bond spreads are really tight right now, historically tight, so you're not getting paid for that risk. People are looking for other areas of yield. A big chunk of the assets we manage, about half of those assets are insurance company assets, and we really like investment grade private credit. I mean, I don't think that gets quite as much attention in the press as the below investment grade credit, but there's some really attractive investment grade private credit opportunities out there.
Just wondering, in terms of the things to watch for us in the coming weeks, in terms of market impacts, the Supreme Court, of course, is about to decide on whether the tariffs that were imposed by the U.S. government should be in place or not. I'm just wondering, how strong a market reaction do we think we should expect?
I think the market would rally on tariffs being overturned. I mean, markets generally don't like uncertainty, but we've all seen reports. I think Morgan Stanley came out this past week with a report saying they thought about 50% of the tariffs could be implemented. I think it would be a little higher than that, but I think the market would probably welcome it in the short term. But I think either way, between that and a live Fed meeting in December, we're going to see some more volatility in the next month or two.
I wonder, when it comes to the Fed, the president is getting a chance to replace more than a couple of seats now. And are you worried about independence? I talked to Paul Tudor Jones a couple of months ago, and he said he expects President Trump to put in the yesest yes man he can in the chair. Is that a problem?
It's really interesting. If you chart, Fed independence globally and rates of inflation, you do see a correlation between reduced Fed independence or central bank independence and inflation. So, in that scenario, you would be, looking at potentially higher long-term rates, and you'd want to position yourself accordingly.
All right. Interesting stuff. Nina, thank you so much for bringing David. David, thank you so much for joining us early this morning. We'll have to get you back. David Royal there of Thrivent, along with Bloomberg's Nina Trentman. Check out Bloomberg's CFO Briefing. It's a weekly newsletter for and about CFOs, featuring top executives at global companies and covering key trends in corporate finance. And not always this early in the morning. Coming up, President Trump's reversal in one of his biggest positions lately, his resistance to the release of the Epstein files. Now he says it's okay for his Congress and Senate to vote for that. And a look at what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Time now for your front page news. First up on The Wall Street Journal, a sharp reversal for President Trump. He now says House Republicans should vote to release the Epstein files. He posted on Truth Social that we have nothing to hide and it's time to move on from this Democrat hoax. The House is scheduled to vote this week on whether to require the Justice Department to release the files. Next up on the New York Times, Border Patrol agents descended on Charlotte, North Carolina, searching for immigrants who are in the U.S. illegally. The operation, dubbed Charlotte's Web, has already drawn criticism for the name and its aggressive tactics. Local officials have been telling people to record their interactions with agents. It remains unclear how long the Border Patrol agents will stay in the city. And on the Washington Post, President Donald Trump said he's considering talks with Venezuelan President Nicolas Maduro. Trump has accused Maduro of leading a narcotics organization, sending drugs to the United States. The suggestion of potential diplomatic outreach, though, comes after weeks of escalating tensions in the Caribbean, with the U.S. deploying an armada of warships and troops to the region. In terms of futures, we're still seeing gains just 4 hours away from the opening bell. S&P futures, although still up, those gains are being diminished. The dollar right now up at 12.17 on the Bloomberg Dollar Index, and the 10-year yield over 4.12. Coming up, markets awaiting long-delayed economic data. We'll look ahead with Citi's Lucy Baldwin next. This is Bloomberg. It is 5:30 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Stock futures rise as investors look ahead to Nvidia earnings later in the week. Bitcoin rebounds after erasing its year-to-date gains. And President Trump urges House Republicans to vote to get the Justice Department to release the Epstein files, reversing a stance he's held for months. Here in the U.S., airlines are set to resume normal operations after more than a week of government-mandated flight cuts as Boeing's factory workers return to building planes. In terms of futures, we still see gains, although those are dissipating as we get closer to the opening bell. Right now, S&P futures up only 0.3%. NASDAQ futures still up 0.5%, and the small caps are just treading water here. In terms of yields, we see them coming down as investors buy government debt. Right now, the 2-year yield at 359.76 and the 10-year yield just over 412. And Bitcoin has erased its year-to-date gains. It's coming back a bit, as you can see, at 95,563. But now just dead even in 2025. For some of the stocks to watch, the individual stock stories, let's get over to London. Valerie Titella standing by. Valerie?
Good morning, Matt. Let's start with a check on Google. Perhaps the reason why we're seeing the Nasdaq outperform this morning is that we're seeing shares of Alphabet up near 5%, and this comes after these 13F filings from Warren Buffett's Berkshire Hathaway have shown that they have built a near $5 billion stake in Google in the third quarter. Now, while these 13F filings are backward-looking, Warren Buffett has talked extensively about missing the rally in some of these tech names. It does seem like he was tempted in to Alphabet in the last quarter. Let's move on to some calls from analysts at Morgan Stanley. They are downgrading the hardware space, and with that, giving Dell Technologies a double downgrade. So we're seeing shares of Dell down nearly 4%, and shares of HP and HPE down around 2% off the back of this. Now, they are citing a sluggish demand and that this memory super cycle is going to be posing some issues for these hardware names in the coming quarters. Lastly, let's move on to some M&A or acquisition speculation, shall I say. Clearwater Analytics is up nearly 14% in pre-market. This is an analytics company based in the investment space. There was some speculation about them being taken private last week. Over the weekend, it was confirmed that Warburg and Premier are looking at taking this company private. It's interesting because those are the two private equity names that actually took this company public back in 2021. But with the share price back down to where it was when they went public, perhaps they're seeing value in taking the company private yet again. Matt?
Valerie, thanks very much. Valerie Teitel with some of your stock movers. Now, earnings season is nearing an end. We have 11% of the S&P 500 market cap reporting this week, with Nvidia slated for Wednesday, and that obviously makes up a huge part of it. Joining us now is Lucy Baldwin, Global Head of Research at Citi. And Lucy, you know, ex-Nvidia, we've had a pretty good earnings season. We've got double-digit earnings growth once again, and we weren't expecting that as we came into it.
Yeah, good morning. Great to be with you. Yeah, absolutely right. We've had a strong earnings season. I think the magnitude of the beats a little bit less than they have been previously. And I would say, obviously, that some of the reactions to earnings season has been less good than hoped, right? In terms of the positioning, obviously, coming into this, many people now set up for long equities into the back end of the year, expecting that sort of Santa rally given the performance that we've had year to date. And so some of those stocks not performing as well as you might have expected as we've gone through earnings season. So I think that tells us a lot about the kind of reluctant bulls that you see across the investor community at the moment.
Well, as you said, it's not been quite as good as it has been in the past. Really, we expect about 5%, a 5% beat on profits, right? So what are we looking at in terms of earnings expectations in Q4 and in 2026? And let's go ahead and just add that 5% in.
Yeah, look, I think, you know, the expectation generally is that you're going to see that double-digit earnings growth going into next year, and that's on the back of an unbelievably resilient economy, right? So at the end of the day, as we've come through this year, the US market and many other markets around the globe have performed better than economists expected, generally seeing some upgrades. And if you think about the first quarter, you know, why are so many people still long equities other than this amazing structural AI boom? The reality is people are still long because they're actually expecting to see a good pickup in growth next year. There's that expectation, particularly in the US, for the stimulus to kick in and provide a lot of support. There's the expectation that consumers will have money back in their pockets with the tax refunds. There's some other incentives in the One Big Beautiful Bill that should incentivize more companies to invest. All of that should give you a good growth picture in the first quarter of the year. So in many ways, quite a positive setup. But of course, there's that wall of worry that people still have to climb, because you have got a number of issues, not least, of course, valuation in the US market in its 98th percentile of history, as well as the big question around whether the Fed is or isn't going to cut rates imminently and then continue that cutting cycle into next year.
Lucy, of course, we're focused here in New York on the US markets. You're talking about the United States, but we've seen real outperformance in the rest of the world. What do you expect in terms of that kind of continuation? Will we still see Europe, Asia, EM outperforming U.S. equities into the end of the year and next?
Well, I think as you look longer term, you're right. The expectation that you're going to see perhaps better earnings growth coming through in other parts of the world is definitely something that investors are focused on. Usually when you have a Fed cutting cycle, and by the way, our view is that the labour market is weak enough, given some of the data we've just seen, the layoff data, to get this cut in December and then a couple more cuts next year. When the Fed's usually cutting, that broadening thesis tends to hold, both in terms of the US stock market performance, but also in terms of rest of world. And so our expectation is you are going to see that. I've just come back from China as an example, and there was a lot of buzz there, particularly around AI. And again, that's a market where it's trading on 13 times forward earnings relative to obviously the S&P on 23. So there's much less of a valuation concern in terms of the capping of that upside, and an expectation that you can have some really, really strong earnings growth from some of those high-tech sectors. So we like many of the emerging markets, China included, where we'd be overweight, and even for Europe, when we look into next year, we've sort of got mid to high single-digit upside in earnings, and then obviously in terms of that expansion in the market next year. I think the concerns people have has been around some of the narrowness, both in the European market and in the US market, as being an indicator of, again, issues to watch for. So we're cautiously optimistic, and we're still very much long and overweight equities from an asset allocation perspective as we go into next year.
Yeah, concerns here about the concentration risk, as well as the valuations. You bring up the S&P trading at 23 times earnings, plus the fact that we saw last week SoftBank selling all of its Nvidia stake. Now we know that Peter Thiel has sold all of his Nvidia stake. Jeff Gundlach says he wants to go to cash because of equity valuations. is there any concern on your part that we could be seeing the bursting of a bubble at some point?
Well, the question of is it an AI bubble is probably the most asked question out there at the moment, as you say, right? And I think our view, we've got some split views internally, right? We think there's many aspects of this that technically look like it is a bubble that is building. You know, Dirk Willer, our strategist, would suggest that you have got the beginnings of a bubble, but that doesn't necessarily mean you don't want to own equities, right? In fact, we think you almost always do at the beginning phases of a bubble period. I think what people are looking at the moment is the leverage that's starting to build in the AI ecosystem. So up until now, we've typically had this great backdrop that most of the money being spent has been spent in capex terms by the big hyperscalers out of cash flow after dividends, after buybacks, right? And so that has given people a lot of faith that this is different to the early 2000s. But I think we're now at that sort of tipping point where more and more of the money that needs to get spent from here on in this capex spending spree is going to have to come from debt. So we're shifting from an era of fiscal expansion post the pandemic into an era of credit expansion. So we think the bubble, if you like, can have quite a long time left to run, because I think a lot of the backdrop is still very healthy. But we are definitely entering a new phase where there is undoubtedly more leverage coming through in that AI ecosystem, which of course is why investors are watching so keenly for what the returns outlook for this space is actually going to be like. Because again, I would say the spending on the infrastructure piece has been a lot more and a lot heavier than people perhaps expected to see. And the monetization has been in part a little slower to come through, particularly at the enterprise level. So those are all things that we're going to have to watch for as these trends continue. But we do feel that the backdrop is still pretty positive in terms of being long that group of tech names in the US. But to your point, flagging the narrowness of returns that are coming through, that is a typical feature as we go through a bubble period in markets.
Lucy, great to get some time with you. Really appreciate it. Lucy Baldwin there of Citi coming to us out of the big smoke. Now let's get on to the top stories trending on the terminal this morning. U.S. airlines will be able to resume normal operations starting today. After more than a week of government-mandated flight reductions, the U.S. Transportation Department and the FAA announced they would lift cuts across 40 major U.S. airports starting in about 20 minutes' time. Boeing expects to triple deliveries of seekers that guide Patriot missiles amid high demand for the air defense system. Boeing's Defense, Space, and Security CEO Steve Parker spoke to Bloomberg's Guy Johnson from the Dubai Air Show.
It's really about our customers, so driving discipline back into our program management, our engineering resources, making sure we're looking at risks, and looking around corners. So it's been a good year. The team's stepping up.
But do you feel the last few years have been difficult? You must feel that this business is on the front foot now.
Well, definitely, to use a bit of a cricket term, definitely on the front foot. And again, I think you're seeing some confidence come back in. But again, just discipline, making sure we're for the new work that we're winning, we're bidding it the right way, so we can execute with schedule margin, technical margin. But I like the progress.
China is escalating its confrontation with Japan over Prime Minister Sanae Takaichi's comments on Taiwan. Beijing has since warned citizens against traveling to Japan, and state media said that Beijing has, quote, made full preparations for substantive retaliation. Coming up, a major reversal. President Trump is now urging for a vote to release the Epstein files after fighting back against it for months. More on that story next. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. After months, President Trump has changed his position on the release of the Epstein files and is now looking to have them released, posting on Truth Social, quote, House Republicans should vote to release the Epstein files because we have nothing to hide and it's time to move on. The House Oversight Committee can have whatever they are legally entitled to. I don't care, in all caps, with an exclamation point. Joining us now from Washington is Bloomberg's John Harney. So, John, this is fascinating, especially on the heels of labeling Marjorie Taylor Greene a traitor because she wanted to release the Epstein files. Why was he so against the release, and why is he now for it?
He said all along that the issue of the files amounted to a hoax by Democrats to distract from their own failings, particularly the shutdown, which ended last week. Now, this is certainly a big about face. And for months now, he'd been saying he didn't want the files released, even as almost all Democrats in the House and a few Republicans, including Marjorie Taylor Greene, asked for that they be released. Now, we should point out that this, even if the House does approve it, it still has to go before the Senate, and President Trump has to sign this measure. So we still have a ways to go before these Justice Department files are actually released.
Well, and it should also be pointed out that these files are going to be coming from the president's Justice Department, and he's really taken control of that department. So how much can we even trust? I'm wondering if people are asking this question in Washington, what the Justice Department gives us at this point.
Well, we'll have to see. I mean, there were all sorts of speculations and, of this kind. I mean, we're just going to have to let the process play out at this point.
Yeah, it can't be forgotten that the Attorney General herself said at one point she had the Epstein files on her desk and then later said there were no Epstein files. The president has also floated talks now with Maduro, the Venezuelan leader, just after the Secretary of State labeled Maduro and a group with which he's allegedly involved a terrorist group. What can we take from this?
Well, the group is called Cartel de los Soles, or Cartel of the Suns, and the State Department claims that President Maduro of Venezuela leads this organization, and this designation puts Cartel de los Soles in the same league as, say, Al-Qaeda. All this comes as the United States has brought a huge military has drastically heightened its military presence in the Caribbean with a flotilla led by the Gerald R. Ford, an aircraft carrier. So military action, is that in the offing here with this designation? But at the same time, President Trump said last night, as he was heading back to the White House from South Florida, he seems to be willing to talk to Maduro, and that the Venezuelans are eager for some sort of negotiations. What the outcome of those negotiations would be is as yet unclear. Many Secretary Rubio and others are demanding that Mr. Maduro step down.
All right, John, thanks very much for joining us. Bloomberg's John Harney out of Washington, D.C. Now, over the weekend, documents released showed that former Federal Reserve Governor Adriana Kugler violated Fed ethics rules and was subject to an internal investigation when she resigned in August. Her abrupt exit allowed President Trump to appoint an ally in Stephen Myron at the central bank. Bloomberg's Alistair Bohl from our economics and government team joins us now for more. And Alistair, this is interesting. We had no idea why Kugler had stepped down, and I guess now it's because she was trading stocks during a blackout period. Is that right?
Good morning. Yes, that's correct. And it is a bit of a head scratcher after everything the Fed went through in 2021 and 2022 with irregular multiple transactions by two of their regional Fed presidents. And after that, Fed Chair Jerome Powell drew up very strict and very clear guidelines to avoid a repeat. And yet again, we've had a number of transactions in prohibited securities during a blackout period. But you're right, it does clear up why she did sort of suddenly exit. It was very perplexing, and the investigation is ongoing.
I see. So, we don't have yet all the details. A lot of times I know that these officials are working with agents who could, I guess, trade stocks without their knowledge. But she did ask for a waiver from Chair Powell, and he denied that, right?
That's right. But I think that might have been something to do with the fact that she got a waiver for the previous year before. So in a way, this was a repeat problem. And it was her husband trading, according to the disclosure. And you've got to wonder, I mean, after everything they went through, after the efforts to make it very clear these are things you can't own And if you do own them, you can't sell them within a certain period of time. For that to happen again, it is really a bit of a head scratcher.
So this now allowed the president to put Stephen Miron in place. And I wonder how our central bank independence here in the U.S. appears, especially to the rest of the world, Alistair. Under attack is a phrase that's been used quite a bit, and the president is going to be able to appoint a new Fed chair soon. Are there doubts about U.S. central bank independence?
So the US central bank is the gold standard of central banking, but the constant attacks from the president have clearly raised a question mark over the durability of its independence. This issue, which must drive Chair Powell completely crazy, it creates an opening. It allows it to be attacked yet again, and it's bipartisan from both the Republicans and the Democrats on Capitol Hill, who are calling for stronger guardrails and greater transparency, which probably, if you're at the Fed, feels a little ironic, given their rules are already a lot tougher than the rules that lawmakers subject themselves to. But, you know, in this environment where you're under an enormous amount of political pressure to lower interest rates, do something, you really don't want to kind of create any open. You do not need to be on the back foot, and this kind of puts them on the back foot a little bit.
Yeah, if you're a Fed governor, maybe tell your spouse not to buy and sell shares of Kava and Southwest. Alistair, thanks so much for joining us. Bloomberg's Alistair Bull there of our economics and government team. Now, Doubleline Capital founder Jeff Gundlach has a warning. The next big crisis in the financial markets will come from private credit. He spoke with Odd Lots anchors Joe Weisenthal and Tracy Alloway.
The most ridiculous argument of all for private credit has been private credit belongs in every portfolio because it lets you sleep at night, because it helps you ride out the volatility of your public credit. Again, that's just a repackaging of the volatility argument. If you don't market to market, there's no volatility. But if the price goes from 100 to 0 in a matter of a few weeks, there's something untoward is going on. And so I'm very, very negative on those types of non-transparent markets. It reminds me, I've been saying this for probably 2 years now, that the next big crisis in the financial markets is going to be private credit. It has the same trappings as subprime mortgage repackaging had back in 2006. Now, it took a couple of years for it to totally unravel. So this stuff doesn't happen in a week or a year even. But I'm very negative on that.
That was Doubleline Capital founder Jeffrey Gundlach speaking with the Odd Lots podcast. Joe Weisenthal and Tracy Alloway are the hosts. This is Bloomberg. Let's take a look now at what's ahead this week. First up, Fed speak from Williams, Jefferson, Kashkari, and Waller coming all throughout this day. Then on Wednesday, we'll get the Fed's latest meeting results and Nvidia's third quarter earnings coming on Wednesday after the bell. Plus, the Bloomberg Africa Business Summit kicks off today in Johannesburg. Heads of state, central bankers, and CEOs will gather to address the issues shaping the continent's future. Guests include JP Morgan Vice Chair Daniel Pinto and Johannesburg Stock Exchange CEO Leila Fourie. In terms of the markets right now, we're looking at Nvidia shares that could weigh on the trade, down 0.5%. Google shares, on the other hand, up 5%. That's it for the Bloomberg Brief. Surveillance is up next.